Hey everyone, Anthony Venuti here with In Touch Mortgage Solutions. I hope everyone is safe and practicing social distancing, isolating, and staying at home where possible. Thank you to our essential services, especially our medical staff, and all those people out there getting those goods and services, the food to the stores, so we can, have access to that. So jumping in, I wanted to do this video specifically more about the mortgage deferral program that's most of you may be aware of right now, that is being offered by the major banks and all institutions across the board in one way or another, one shape or form. The most important thing that we've been getting in feedback from our clients as well as from the lenders is the fact that not everyone will be eligible for the program. And although you may be asking why, the banks are looking at everything case by case, as I mentioned in earlier videos. But the most important part about that is, if you're still working, if you're an essential service, if you're able to make the payments, if you have the means of which to make the mortgage payment, the banks will take that into consideration. They're looking to defer people that have actually been severely impacted by it, like they're not receiving money, are off work. And the most important part of that is also making sure that we're not clogging up the lines for the people that actually have severely been impacted by it and are like literally not able to make their mortgage payments. So first and foremost, think about your eligibility. If you're still receiving, if you're still working and you're an essential service and not been laid off due to COVID-19, or if you have the means to make the mortgage payments through other line of credit, savings, take that into consideration. Only you know your financial situation better. So that is your call. Each bank will react differently to, as I said, the requirements for the eligibility, and that's important to consider. But what I really want to stress is that they could be, if you look to defer, each bank may offer you a different solution, but relatively along the same line. Some of them may add fees, some of them may not add fees. So it's important to speak to your institution or talk to your mortgage professional to see if they have any information regarding your specific lender. With that being mentioned, its interest accrued on the deferral. So it's not a free ride where you defer this for 6 months and then everything stays where it was. If you're deferring your mortgage payment by up to 6 months, the interest that would have been due to the bank is still required by you. You're just not paying it for 6 months and it's getting tacked on to the back end. The simplest way to use an example is if you have a $2,000 a month mortgage payment, and let's say your principal is $1,000 and your interest is $1,000, that $1,000 is added back to your mortgage balance, and then you're increasing it by, let's say, $6,000 in that example. So it's not that you're just getting exempt from any payment and that it's going to basically go away. With that being said, each bank institution may either do something along those lines or may charge a fee. But when you're speaking to your lender and you're getting the information, always make sure to take down the name and the employee number of the person that you were talking to. And if they're following up with you, make sure that you're asking the questions so that you're getting the right advice or the best advice possible at that specific point in time. Make sure to contact your lender. Don't just, think that it's going to automatically take effect and that the banks will figure it out. If you don't contact them, there could be some implications or ramifications via, credit issues. So if you're looking to defer your mortgage payment or your loan or some type of credit card, always contact the institution or the provider to let them know. As I said, this way they can at least document it, and providing they document it correctly, there should potentially be no impact on your credit down the road. But as I said, it's all input by humans. There's probably millions of people trying to do the exact same thing. Errors will occur as we are adapting to new policies and procedures, and bank departments implementing new people and reallocating staff to certain sectors. So we just want to make sure that that's clear. Jumping into the mortgage marketplace as we stand right now, banks are doing a little bit of due diligence. They are examining new deals rigorously. So that is important, is considering that if you're employed, if you're not employed, if you're off, how long you're going to be off for. These are things that the banks will start to look forward as businesses start to shut down and we're starting to feel the contraction in the economy. So this is really important to consider. So when you're out there, if you have a deal already in play and the requirements have been conditioned and fulfilled, each bank will respond differently to it. But as I said, reach out to your institution and reach out to your broker, and they can provide you with a little bit more insight. As far as the real estate, things are pretty, level, as most of you may know. With the panic itself, it's a little bit different right now. So, open houses have been suspended. People are, in a different state of mind right now, which is understandable, as we all are in that state of mind. I'm hoping that we come out of this relatively soon and go back to our normal economic situation and continue along the path of rebuilding after we're out of this. But with that being, mentioned, I just want to really stress the importance that if you're making these decisions right now for, let's say, locking into your variable rate mortgage or from a variable to fixed, is look at the situation, look at the potential outcome. Don't make a hasty panic decision and, do something that's going to tie you into that mortgage. The banks may offer you specific products and services. Really take a good look at what they're going to be offering you for today, but also for tomorrow, because if you're locking in or making those refinances at higher rates and locking in, you could be setting yourself up for some trouble, especially if you're using credit facilities or borrowing solutions to help you navigate through this difficult time. So always talk to a mortgage professional, get the right advice, see exactly what your situation is, and that is the best advice that we can give to you as a professional in the industry. Is just you understand it's case by case. Your individual needs trump everything, and your finances better if the deferral program is something that you will need to use, or if you can avoid it. I hope you found this video helpful. I hope everyone's having a great day as best as possible, and we wish you all the best and be safe. Thank you very much.